Hey everyone, Daniel here. The Federal Open Market Committee met today choosing not to raise rates. This is the Fed breakdown you've been waiting for. Today's policy decision wasn't just about rates staying flat. It was a stealthy game changer with clues about inflation battles, potential political fireworks on the horizon, and shocking twists in market expectations. I've got your top 5 most important takeouts from the meeting today and what you need to know to protect your portfolio. And I'm saving the most critical tip for last, so make sure you stay tuned. Let's dive in. Takeaway number 1, the Fed's inflation alarm just got louder. They quietly signaled rising inflation fears by dropping language about progress towards their 2% target. Chair Powell claimed it was just tidying up, but insiders see this as a red flag. The translation is that they're not done fighting inflation, even if they won't admit it yet. Stay vigilant on energy prices and wage spikes. Basically, this is an inflection point, and we don't know where the economy will go from here. The second takeaway was Trump versus Powell, a potential ticking time bomb. Trump's threats to demand rate cuts and push inflationary policies such as tariffs and mass deportations could spark a Fed independence crisis. Powell swore he's not ignoring the noise, but markets fear a Turkey-style breakdown if political pressure boils over. This showdown could rock stocks, bonds, and your retirement account, so this battle is worth paying attention to. Our third takeout is that markets have gone from expecting rate cuts to considering rate hikes. Just 4 months ago, traders bet on 6 rate cuts this year. Today, a stunning reversal. The first cut isn't priced in until July, and by 2026, rate hikes could be back on the table. This isn't a pause, but a potential cycle turning point. Growth stocks, crypto, and real estate, or anything else that might be sensitive to rates, buckle up. Our fourth takeout is that the immigration crackdown is the inflation wildcard. Trump's deportation plans could yank cheap labor out of the economy, supercharging wage inflation. Powell downplayed the short-term impacts, but supply chain pros know fewer workers plus higher costs equals stagflation risk. Watch the jobs report like a hawk. Finally, I think we should really discuss the Fed's AI blind spot. Here's the kicker. While AI stocks like Nvidia crashed this week on China's cheap tech breakthrough, Powell shrugged it off as not macro critical. Big mistake. If AI slashes costs and jobs long term, it could deflate inflation or trigger a productivity shockwave. The Fed's asleep at the wheel and you shouldn't be. And I think this is really your edge in trying to understand where rates might go from here. Personally, I think they will continue to go down, but it's really an assessment of how long it will take for AI breakthroughs to roll out across the economy. So there you have it, a Fed on edge, a potential inflection point, political chaos might be on the cards, and an AI curveball that could make or break your 2025 trades. Smash that like button, subscribe, and hit the bell, because when that next Fed bombshell drops, you'll hear it here first. If you want to understand the crash in stocks at the beginning of this week, how DeepSeek wiped $1 trillion off Nvidia's valuation with 4 key innovations, watch this video over here. Stay sharp out there.